Hooty-hoo, all my stock market gamblers. Welcome today. It's Wednesday, May 5th, Cinco de Mayo. Happy Cinco de Mayo, everybody. What is going on today? Well, not a lot. The Dow is down a little, the Nasdaq's up a little, pretty flat, S&P flat. Okay, so what happened yesterday? We saw a lot of volatility. A lot of volatility came in. Okay, volatility spiked and the markets came down. But what happened? We have the buy the dip mentality. They bought the dip and they brought it back up. Okay. Are we out of the woods yet? No, I don't think we are. I think we got volatility still ahead. A lot of volatility coming. Now, is it still the buy the dip mentality? Yes, it is. I believe it is. I don't think we're going to crash just yet. We're going to crash eventually, not just yet. Now, why are we not going to crash? Well, today, let's talk about that. Let's talk about inflation. A lot of the news channels are reporting that there's inflation. If you go to the grocery store, you'll notice that there's inflation. Prices are moving up. Gas station moving up. You go fill up your car. It takes more dollars to get your car full. Okay, a lot of people aren't even driving much right now, but when you start driving, you're going to notice it's going to cost you more. If you go out to a restaurant, particularly nice restaurants, prices have really gone up in those restaurants. I'm telling you, they even tack on, what is it? Cost of living wage. It's like a surcharge on top of the tip charge, which is kind of funny to me. Okay, but prices are going up. But hey, if you ask Jerome Powell about inflation, he's the head of the Fed, he'd tell you, don't worry about inflation. We're going to print our way out of inflation. Now, I know I was an economics major when I went to school. I know that I was taught that you cannot print your way out of inflation. Now, a lot of people believe that when you print money, that is actually inflation. And they would be correct. You're expanding the money supply. Expanding the money supply is inflation. So printing of money is inflation. But that's how they're planning to get us out of this inflation. Now, they'll tell you there's no inflation. But even by their own standards, if you took the first quarter inflation and you multiplied it by 4, we would be running over 4% inflation. Now, me and you know that inflation is a lot more than 4%. We know that it's probably closer to 10%. Some people predict it's as high as 20%. Inflation is running wild. It's called runaway inflation. That's what some of the news sources call it. They say we have runaway inflation. But once again, you ask the Fed, they'll tell you, no. The inflation that we're having right now is transitory. Transitory means it's going to go away. Well, I got a question for you. How do they know it's going to go away? I would even disagree that it's not going to go away. It's going to show up more and more. Why is there going to be more and more inflation? Well, because we continue to print more and more money, which expands the money supply, which is inflation, which is going to cause those prices to go up. So this transitory inflation, in my opinion, is here to stay. But they'll tell you, no, it's not here to stay. Now, imports, what's going on right now? Well, people are not working. They're getting paid to sit at home, stay at home, play video games, watch TV. They get paid about the same amount of money as if they went and worked in a restaurant. That's why restaurants are having trouble finding people to work to employ their restaurant with. They're just, people don't want to work. Why? Because they can get about $15 an hour to stay at home. So even the restaurants, when they pay you $20 an hour, it's a trade-off. Do I want to stay home, make $15 an hour, or go to work and make $20? I don't know. Well, maybe I'll go to the interview. Yeah, okay, I'll go to the interview, because a lot of restaurants are actually paying you money to go to the interview. McDonald's will pay you $50 to go to an interview. I heard another restaurant paying $100 just to come in and talk to them, just to go to an interview. Maybe that's a new career. Maybe you can just be a professional interviewer where you just go and interview for jobs. But is pressure on wages. Wages are going higher. Restaurants have to pay $20 an hour just to get someone to come in and bring you food. Okay, so there is inflation out there. But the imports, okay, now imports. We are not making products here in the U.S. Where do all of our products come from? Most of them come from China. We import them from China. Now these imports, well, that inflation is already going up 8% a year. Now, we're priced at 4%. The government says we're at 4%. Now, the government doesn't count your rent. They don't count groceries. They don't count gas. Pretty much they don't count anything that you're buying, but inflation's at 4% according to them. But import inflation is at 8%. But I know, shadow stats will tell you we're over 10%. So we're going to get out of this by printing money. That's how we're going to get out of this runaway inflation. I'm telling you, the Fed is making the wrong choice here. They should not be putting more money into the money supply. They should be taking money out of the money supply so the money supply can contract and less money circling around. Okay, but no, they're going to put more and more money. The Fed admits to buying $120 billion of assets every month. Now, these are made up of treasuries. They're made up of mortgage-backed securities, but they're admitting $120 billion a month. Well, that's $1.5 trillion a year. Now, that's just the Fed. That's not Biden. Now, Biden in his first 100 days, he's already wants to print $6 trillion. Well, $2 trillion for that stimulus package we just had. Another $4 trillion for this infrastructure thing he's got going on. That's $6 trillion already. Okay, so he's going to print that money and put it into the money supply. Money supply expands. Inflation goes up. We got this runaway inflation. And once again, they think they can get out of it by printing more money. How ludicrous is this? I'll tell you, we have not had runaway inflation in the United States. Back in the 70s we had it. You know how we got rid of it? You know how we stopped the problem? Well, this guy named Paul Volcker came in and he raised the interest rates to 20%. Where are interest rates right now? Well, they're very close to zero. Very, very close to zero for the discount rate. It's at a quarter point. So if you raise that up to 20%, what would happen? Well, everything, and I mean everything, would implode. It'd make the Great Depression look like it was good times. We would have a depression that is so big, so mammoth. I'm telling you, we can't even raise the interest rate up to 2%. That 2% would destroy the housing market. It would destroy the stock market. But 2% raising inflation, when inflation's running at 4, you raise interest to 2%, that inflation's going to go to 8. You keep chasing it. You got to get ahead of the inflation. You got to get above it. So if inflation's at 4, you got to go 6%. You cannot, in other words, this inflation is not transitory. It's not going to go away. It's not going to be transitory. Once inflation gets out, it will destroy the country. It can bring a country to its knees. It will actually probably kill more people than the virus. When you go to the grocery store and a loaf of bread is $50 or $100, there's a lot of poor people that are not going to be eating. These people are going to suffer. Many are going to die. Runaway inflation, hyperinflation destroys a country. They do not survive hyperinflation. They do not. The currency will not survive hyperinflation. So the Fed, they have to get ahead of this, but they cannot. They have no tools. Oh, Jerome will tell you we got big tools to use. Jerome, you got no tools. Your tool is printing money, and printing money is not going to get rid of the inflation. No, you should be raising interest rates right now, but you're not. You're not even thinking about raising interest rates because you're an idiot. Yeah, you're an idiot. Jerome, you're an idiot. Okay, so what we're going to have is this runaway inflation, 1970s style, with no way to stop it. No way to stop it. There is going to be pain and suffering brought to our country because of the mistakes that the Fed is making right now. They should stop printing money immediately, and raise interest rates immediately, if they even want a chance at putting the inflation back into the bottle, because it's going to run. It's going to to run. You're going to see it. Now, what do you do about this? What do you do about this? You protect yourself. You protect yourself. Okay, if this inflation starts to get out and they have to chase the interest rates up, what's going to happen to the stock market? It's going to come down. It's going to come down. How do you protect yourself from that? Well, you can either sell your positions and take them off, or you can buy puts. Now, you can buy puts on the market to protect yourself to the downside. Now, another way to protect yourself from inflation is to buy calls. Buy calls on the stock mining companies, the miners, the gold and silver miners. You can buy gold and silver and stack it. That's a good way to protect yourself. But buying options on the silver miners, on the gold miners, this is a good way to protect yourself from the coming inflation. That is not transitory. It is not. It's not transitory. Look at the Fed. They're going to print more money. They're going to keep interest rates low. They're making all these mistakes when we have runaway inflation, and their only way is to try to talk yourself out of it. It's not runaway inflation. We have it under control. It's transitory. No, you don't. No, you don't. You do not have it under control. You must raise interest rates. Right now, interest rates are actually negative. I don't know if you know that. You can do the math yourself. Look, what is a 10-year bond paying right now? Well, it's about 1.5%. Okay, 10-year bond at 1.5%. What is the real rate of inflation? Even the government will tell you it's about 4%. So you take 1.5% minus 4% for the inflation, and you got yourself a negative inflation rate of 2.5%. Right now, we're at negative rates. You got to raise the rates. You got to stop this inflation. Inflation is going to run, and it's going to get out of the bottle. They'll tell you they're worried about deflation. Well, eventually they're going to worry about deflation because they're going to have to jack up interest rates to chase inflation, which is going to bring everything down. So just be cautious out there. Be cautious. Maybe buy some puts on the market. Maybe buy some calls on the mining stocks, silver and gold miners. Great thing to buy calls on. This is all I got for you today. If you like it, give me the thumbs up. I always appreciate that. Helps me out on YouTube. You know, I get maybe 50 people, maybe 100 people. More thumbs up, the more people will listen. Hey, that's kind of cool. Anyways, if you really like it, hit the subscribe button. We'll talk again real soon. Have a happy Cinco de Mayo. Happy Wednesday, everybody. Get out there, do some trading, and we'll talk again soon. Bye-bye now.